These are the 5 Bitcoin catalysts which are triggering the next crypto bull run. I'm going to explain why each one of these catalysts is significant and what it means for your portfolio. Hopefully by the end of this video, you have an understanding of just how big of an opportunity we have sitting right in front of us, as well as a more technical understanding of the market dynamics that are currently powering the crypto market. This is super important if you want to succeed in this market. Without further ado, let's dive straight into the video, and of course, if you enjoy this type of content, make sure to click that subscribe button so you don't miss an upload. I upload every single week. Also hit that post notification bell so you don't miss a video. I put lots of effort into these videos, and I've done a lot of research today to try and condense what I think are the 5 most important things that you need to know right now as a crypto investor. Without further ado, let's get into Bitcoin catalyst number 1, and that of course is the Bitcoin Spot ETF and an ETF approval. There's a strong chance that a Bitcoin Spot ETF gets approved within the next 85 days. The next key date for the ETF is the 17th of November. However, most analysts expect the SEC to continue to delay, which would take us to the final deadline of 21 shares an ARK on January 10th. Bloomberg analysts give a Bitcoin Spot ETF a 90% chance of approval by Q1 next year. And of course, once one ETF is approved, we'll likely see all of them approved at once. There have been some major wins for an ETF approval along the way, of course, with Grayscale winning versus the SEC in their court case. However, an approval looks even more likely now due to the fact that the SEC is currently in communication with ETF issuers regarding the changes and amendments required for an approval. This is a positive sign because it indicates that the SEC is open to a dialogue here, and they are also actively trying to make sure that the applications are legitimate as to ensure that no mistakes end up slipping through the cracks. Overall, it's a positive indicator that we are working towards an ETF approval. But what would a Bitcoin Spot ETF actually mean for the market? You're probably hearing a lot about it on Twitter, a lot about it on YouTube, but what does it actually mean? Well, essentially, it means investors will be able to access Bitcoin through the stock market, which would give pension funds and people that don't necessarily have the willingness to access through crypto exchanges the ability to purchase Bitcoin just like they would purchase an ETF on the stock market. So if you do look at the gold spot ETF, this was a clear pivot point for a huge rally that gold ended up going on. You can see here in 2004, the gold ETF was approved and it subsequently launched. After that, you saw gold go on an absolute run from $450 all the way up to $700 in the subsequent year following the ETF approval. And since then, gold's continued higher and higher to $2,000. The ETF was clearly one of the reasons why gold has performed so well, because it gave investors the ability to speculate on gold without having to buy it directly. And if you apply similar logic to Bitcoin, a spot ETF approval would no doubt influence the amount of net flows coming into the Bitcoin ecosystem, which could result in more people holding Bitcoin, thus driving the price up, similarly to what happened to gold. Do I expect, a huge rally to happen as soon as the ETF is launched? No, not necessarily. I actually think it could be slightly slower than some people are anticipating, and we can't say just because gold went up, Bitcoin will do the exact same thing, because pre-GFC, obviously gold went on a run as there was a flight to safety narrative happening at the time. So you got to be careful when you're looking at a sample size of 1, like we are in the case of this chart, but one fact does remain: it's only going to be a net positive for the adoption of crypto long term. Crypto Cred points out in a tweet here that he thinks a spot ETF approval would essentially bring 2 types of flows into crypto. One is the short-term flow that we're seeing at the moment with this latest rally from 25 to the 28K region, which is essentially front-running the news of an ETF approval and a catalyst to give momentum to crypto as people speculate on an ETF approval, which is obviously good short-term. But also long-term, it enables sustained inflows into the crypto market and legitimizes Bitcoin as a real asset that people and pension funds can invest into. It's interesting that apart from the DCA crowd, there's not really passive flows that go into Bitcoin like there is passive flows going into the stock market via pension funds and via asset managers. But once Bitcoin has an ETF, then you will see pension funds, asset managers now all have the ability to essentially passively flow capital into Bitcoin. I think over the long term, this makes Bitcoin less volatile and exposes Bitcoin pointing to less downside as you have more buyers stepping into the market passively versus right now, which is basically just people that are passively DCAing. Not quite as strong as those big institutional flows. So I don't think it'll necessarily cause a huge spike short term, but I think over the long term, there are definitely huge benefits to a Bitcoin spot ETF, and that's why it becomes my first catalyst on this list as something to watch. And what the spot ETF has also done is it's put Bitcoin back into the frame in terms of the media spotlight, and we're seeing big asset managers now, and maybe they have a vested interest because they are applying for a Bitcoin ETF, but we're seeing asset managers like Larry Fink, the CEO of BlackRock, the world's largest asset manager, Fidelity, all starting to talk about Bitcoin more and being more active in the crypto discussion. So I think there has been a shifting in sentiment in line with the ETF talks towards Bitcoin as a legitimate asset. You can see Larry Fink here saying that crypto is almost a flight to quality asset in a time of geopolitical stress and tension. That's something I'm going to touch on later in the video. We also see Fidelity here posting a multitude of crypto reports about Bitcoin and Ethereum fees explained. They're even doing a research roundup in relation to Bitcoin now. So clearly these big guys are stepping into the frame when it comes to the cryptocurrency market, and that is only going to be a bullish thing long term. Let's get on to catalyst number 2 out of 5, and this is the Bitcoin halving. It's the one most people are talking about. It's of course the most popularized Bitcoin catalyst, and for good reason, because essentially what the Bitcoin halving does is it halves the issuance of Bitcoin supply coming onto the market, which from a supply and demand perspective, if demand remains constant and you have the supply halving, well, number go up, right? And it's also a big mental catalyst, psychological catalyst, which ends up establishing these 4-year cycles whereby Bitcoin can rise majorly in price and you get inflows around the time of the Bitcoin halving. So the Bitcoin halving right now sits around 183 days away. This isn't an exact science, but it is an estimate that outlines that we could expect a halving around the 19th of April 2024. And of course, in the past, this has been an extremely bullish event for Bitcoin. Funnily enough, Bitcoin typically doesn't peak around the time of the halving. It peaks around 250 days post-halving. As you can see in 2012 here, you have the Bitcoin halving. Around 300 days later, you have your first post-halving peak in 2013. Once again, in 2016, you have the Bitcoin halving. You do see price starting to move up post-halving and then eventually hit a peak in 2017. And then the most recent cycle, we had the halving in mid-2020, and then we saw the peak occur around 240 days later in 2021. And then we had a secondary peak, which was that final wave to the upside, which happened in November. So if history is anything to go by, the Bitcoin halving does start the process of positive price action for Bitcoin, but it probably won't be till post-Bitcoin halving, so that's actually in 2025, until you see a likely Bitcoin peak. But the halving definitely does kick Bitcoin up a gear in terms of price momentum. However, we still have a little bit to go until the halving, and we do know in pre-halving years, there are sometimes Bitcoin scares. It happened in 2016. It happened very clearly in 2020 as well. Sometimes Bitcoin draws down between 25 and 35% in pre-halving years. In fact, in the last 2 pre-halving years, this has been the case. So it's just something to be wary of. It doesn't mean it's all smooth sailing around the halving. You do get these general pullbacks even in uptrends. That's something to be aware of, and of course those do become buying opportunities when you're DCAing into the market. So for me, we are in a critical period. We're actually in this sideways accumulation phase that we saw between 2019 and 2021, which is your general accumulation phase before you see that massive breakout to the upside. Now, of course, the 5 catalysts I'm talking about in today's video are going to be some of the reasons that Bitcoin could break out to the upside, but it doesn't necessarily dictate when that will happen. Although in previous cycles, we have seen pretty much a constant time frame in terms of the peak to trough drawdown, which was 51 weeks in 2019 and also in 2020. We can't exactly say that this 96-week cycle will exactly mirror the last cycle. I don't necessarily believe that every cycle is the same. History rhymes, it doesn't repeat, and for that reason, I do expect there could be some curveballs chucked in here, whether that means Bitcoin pumps slightly later than expected, or maybe even slightly earlier than expected. But what I do know is this is a general accumulation phase. So as long as you're taking a measured and consistent approach to the market, and you have a plan outlined around a general accumulation phase, I think that's wise instead of trying to time the market to the week, assuming last cycles are going to repeat exactly the same, which they often don't. All right, let's get into catalyst number 3. These next three catalysts are actually quite technical and they focus on the macro landscape of crypto. So really important market dynamics which affect the crypto market. Actually, one of these statistics here has pretty much predicted Bitcoin's pumps to the upside every single time that I want to show you. Before we get into those catalysts, I want to give a quick shout out to one of our official show sponsors, which is Soil, who are a real-world asset protocol that enables you to earn up to 14% yield fully secured by real-world assets. You guys know I'm a big fan of real-world assets in terms of a growth vertical next cycle. I think with DeFi being starved for yield at the moment, it's one logical way to import yield from the real world to cryptocurrency whilst getting the benefits of decentralization. So that's less fees because you don't have any intermediaries, and that's also the ability to tokenize assets on chain, which gives you more transferability and more composability. But Soil specifically is operating in the realm of real estate. Essentially how it works is crypto investors lend stablecoins to the protocol. The protocol provides liquidity to the fiat traditional finance world. Premium institutional and corporate borrowers bring yields back to the Soil protocol itself, and of course that in turn earns interest to pay out that APR that I showed you before in the form of interest back to stakers who are the crypto investors. So it's a nice and simple mechanism to import the yields of real estate on chain. Soil actually recently launched their token. Now, of course, you have to do your own research. This video is not financial advice as to whether you are bullish on the token itself. There's lots of information on the token on their website. As you can see here, if you click on Soil token, it explains a little bit more about it. And you can also click on docs and frequently answered questions to read through their white paper, their pitch deck, etc. Always do your own research before investing into a cryptocurrency. If you do like it, the token is now officially live for trading. It went live about a week ago. You can see that it's actually up from the IDO price. It did have an initial pump. It's now ranging sideways, but as you can see from its IDO price, the token so far has performed well. They've got trading pairs across Gate, Mexi, and OpenOcean. If you are interested, of course, do your own research, but Soil as a protocol is one I quite like, considering the real-world asset vertical, in my opinion, is definitely an interesting one for next cycle. Let's get on with the next catalyst, which is a quantitative easing hedge. Quite an interesting term, but essentially what that means is crypto is your ultimate bet on quantitative easing. Let me explain. Ever since the US dollar went off the gold standard in 1971, they've basically used that as an excuse to just print money. And of course, we do have periods where quantitative tightening does take place, but the overall trend is clear. In order to prop up the economy, money printing must occur. That's the unfortunate reality of the world. It divides the rich and the poor. The rich get richer because they own assets. So when money printing happens in US dollars, their denominated assets increase in value. And then the people that don't own assets and are taught in schools to save money, well, their capital base diminishes in relative terms because of inflation. But that's just the way the world works. And crypto, fortunately or unfortunately, does, specifically Bitcoin, benefit from this because it's the perfect asset to soak up liquidity. That's why you see in periods of quantitative easing, when liquidity is being injected into the economy by the government issuing and buying back bonds, Bitcoin performs really well. And in environments where they tighten, so they take money off their balance sheet, as you can see in front of you, Bitcoin performs more poorly. Bitcoin is one of the most responsive assets in the world to liquidity. And although during times of quantitative tightening, it doesn't perform well, you can bet on quantitative easing over a long duration of time being the more common Fed approach versus QT. You can actually see in front of you, Bitcoin also closely follows the Chinese liquidity because it's not just an asset that's in relation to the US, it's an asset that's in relation to global liquidity in the world. That's a good thing about Bitcoin. It's accessible pretty much all around the globe. It operates in the digital realm, so it's not like a stock market which is more tied to the economy that it's bound by. Bitcoin actually responds to many of the world's major economies. You can see here the Chinese economy, pretty much every time they inject liquidity into the market, Bitcoin absolutely pumps. And every time they remove liquidity or aren't injecting as much into the economy, Bitcoin doesn't respond well. It's a very liquidity sensitive asset. And if you want to bet on money printing long term, yes, you can bet on the stock market. Yes, you can bet on other risk on assets, but Bitcoin, I think, becomes one of the most responsive and best performing assets during these periods. In saying that, you have to weather the storm at the moment because the Fed has been raising interest rates. The Fed has been taking money off its balance sheet. That is obviously why we are in a crypto bear market, one of the major reasons why the market ended up reversing in 2022. However, long term, if you want to take a step back, we all know that eventually interest rates will have to come down and that easing will have to come back. You can even see here there's a probability of cuts into the second half of next year. So eventually interest rates will come back down, and Bitcoin actually responds, of course, a lot better in low interest rate environments. So this is just something to keep your eye on. But if you believe a shift is going to happen eventually from tightening to easing, Bitcoin does become a good bet. And if you really want to simplify things, buy Bitcoin during periods of tightening and sell Bitcoin during periods of easing, kind of doing the reverse of the market, but essentially saying you want to buy in bear markets and sell in bull markets. I mean, it doesn't exactly take a genius to work that out. However, you'd be surprised how the emotions of the markets get to some people. We've already seen a mass exodus of retail in the crypto market because they just couldn't cling on during this period. But the fact that you are watching this video right now, more than halfway through this video, says that you are in this market for the long term. And I must applaud you for being here, because it does take some guts when time capitulation starts to set in. But I assure you that the ones that are here right now will reap the biggest rewards next bull run when everyone starts flocking to come back into the market. All right, I've got 2 more points to share with you. Actually, technically 3, but 2 major ones. The first one is FASB, fair value accounting. One of Bitcoin's biggest catalysts that is extremely under the radar. I don't hear many people talking about this as a major Bitcoin catalyst. You hear about the Spot ETF, you hear about the halving, you hear maybe about global liquidity. You don't hear much about fair value accounting. But for institutional adoption, it's actually one of the most important recent changes that we have had to the market. Let me explain what it is and why it matters. The United States Financial Accounting Standards Board unanimously approved rules for accounting for the fair value of companies' cryptocurrency holdings. The rules will go into effect in 2025. Fair value is the estimated price of an asset that takes into account current market value and other decisive elements. The new accounting method will increase volatility in the earnings of companies with large crypto holdings, but allow them to record financial recoveries from increasing crypto prices. This was something they were previously unable to do. Companies can begin using fair value accounting for crypto immediately if they wish to. Michael Saylor said, "Fair value accounting is coming to Bitcoin. The upgraded rules eliminate a major impediment to corporate adoption of Bitcoin as a treasury asset. To accommodate the changes, crypto will become a line item under intangible assets in financial accounts." This is massive because one of the major reasons many major institutions and corporations didn't want to hold Bitcoin on their balance sheet was because they couldn't accurately report it in a tax-efficient manner. Now they can, which acts as an additional incentive for institutions to hold Bitcoin. So if any company wanted to hold Bitcoin, but they were on the fence before because of the fair value accounting method not being applicable for Bitcoin, now that is alleviated as a concern. And of course, this could drive institutional adoption. And once again, it's kind of like the Spot ETF. I don't think overnight you see the change starting to set in here, but what you probably do see over a long enough duration is more and more companies slowly adding Bitcoin to their balance sheet, like we saw Tesla do last bull run. And that's obviously great for the credibility of cryptocurrency, but also the adoption of cryptocurrency long term. Now let's get into the 4th catalyst. 4 and 5 go hand in hand here, and that is geopolitical black swan events and Bitcoin as a flight to safety asset. I want to show you now how Bitcoin has responded, not versus the US dollar, but versus some currencies in 3rd world countries. Let's look at the Argentina peso. Look at Bitcoin hitting all-time highs over the last year. Let's look at Bitcoin to the Turkish lira. Look at this. Bitcoin hitting all-time highs. Bitcoin to the Lebanese pound hitting all-time highs. Bitcoin to the Nigerian currency. Bitcoin hitting all-time highs. Look at what happens to Bitcoin when the economy starts to falter. It becomes an asset that people flee into as a flight to safety, and one that holds up similarly to gold in times of massive inflation and massive money printing. If you don't believe in Bitcoin, you don't have to. But if you believe in excess money printing, and if you believe in the theory that eventually all currencies go to zero, as we have seen historically to be the case, then Bitcoin becomes a no-brainer long term. Because currencies have to dilute. Currencies have to dilute their value in order to keep the economy afloat. But eventually what happens is you have economic collapses. The system ends up breaking. For some countries, it takes longer than others. But inevitably, currencies go to zero and Bitcoin hits all-time highs, even without the actual asset going up in value. Just the currency diluting against Bitcoin ends up resulting in a lot of instances, as you can see in front of you, Bitcoin actually hitting all-time highs. This hasn't happened in the US yet, but if it ever did, of course, people could flee to Bitcoin as a flight to safety digital gold asset. And this, to be honest, is one of Bitcoin's biggest use cases. This is probably the biggest narrative behind Bitcoin. It's Bitcoin as a digital gold And if things ever start to get shaky in the world, I think Bitcoin is very well positioned to become a digital gold. Let's look at some of the reasons why this is the case. The first thing is it's digital, so it's easily traded. So you can't easily buy and store gold. You can't flee the country with a bag full of gold or a sack full of cash, but you can flee the country with Bitcoin. You can have it on a ledger. It's essentially on the blockchain. So it's in the air, it's in the ether, it's borderless. You can change countries, you still own your Bitcoin. You can't get on a plane with $1 million in gold. You could with $1 million worth of Bitcoin. And you can't store your funds in a bank during a bank run. When everyone's trying to take their money out, what happens if your $1 million that's in the bank account, you can't access? You're not a millionaire anymore. You're worth zero. That's not the case with Bitcoin. The banks can't mess with your Bitcoin. So the thing about Bitcoin when it comes to economic collapses is it becomes a very logical asset to put money into because of the fact it's borderless, because of the fact it's digital, easily accessible, especially during times like you see in front of you when inflation runs rampant and you don't have anywhere to turn. Yes, you could turn to gold. Of course you could turn to gold, but gold's really hard to transfer. Gold's really hard to store. Like it's a physical product, and even if you buy an ETF, well then you're bound to the financial institutions that at that moment you may not trust to keep custody of your assets. So Bitcoin for me becomes a logical flight to safety digital gold asset, and as I said, it's one of the biggest driving narratives behind Bitcoin. Now, if there was a bank run, Bitcoin also responds pretty well. I mean, we've kind of seen this in the data this year. When there was rumors of a banking collapse, Bitcoin responded from rallying off this pivot point at 20K all the way up to 31K. This is remarkable. It was one of the first examples in Bitcoin's history that it can actually respond to a banking collapse. And it shows that the market does believe Bitcoin, maybe even only speculatively at this point, but to some extent, because you can see it in the price, believes Bitcoin as a flight to safety asset during a banking collapse. So if there were ever more banking collapses, expect Bitcoin to perform well. Maybe at first it's a bit shaky as you see a stock market sell off, but eventually Bitcoin ends up responding because it's built for this. This is exactly why Bitcoin is made. It's made to withstand a banking collapse. That's why it exists. And that's why when we see events like this occur, it's going to perform strongly. And in periods of geopolitical uncertainty, there's also an argument to be made for Bitcoin performing strongly in those environments as well. We're almost at the end of the video, and if you've been watching all the way through this video, you could have been making money for just simply watching, like you would have anyway. The way you can do that is through an application called XCAD, which is essentially a watch to earn application that you can install on the iOS store, the Google Play Store, or as a Chrome extension to essentially earn money for watching videos from your favorite creators. I'm a part of the program, so my channel counts under the watch to earn program. But if you go into the play section of XCAD, you can see that there are a bunch of other creators that are also on the platform. Pretty much the biggest creators, all the biggest music artists, Mr. Beast. You can even see Crypto Banter there as well. Basically, your biggest creators are all signing up to XCAD to enable you to earn money for watching their videos. So how does it work? Well, the first thing you'll need to do is, of course, install the extension. As you can see, it's also now available on Google Play or the App Store as well. The first thing you'll need to do is own an NFT. So you'll need to buy a nerd. Now, of course, you have to make a decision if it's worth it for you. I'm not necessarily saying ape into the highest value box. If you don't watch much YouTube, of course, it doesn't make sense. If you watch a lot of YouTube, then it might make financial sense. You have to do the maths yourself. But essentially what you can do is open a box, which gives you a nerd, which enables you to earn money for watching videos. Once you watch videos with the application installed, you can collect your rewards. You can click request, and this will essentially collect the tokens that you've earned for watching. The better your NFT, the more money you'll make. You can also buy these booster packs with play tokens that enable you to earn more per watching video and also speed up the amount you earn per video as well. The NFTs start at $50 and go all the way up to 6K. So there's a range for everyone depending on how much YouTube you watch and how much money you want to put into it as well. And the product recently has been going pretty viral with a lot of big creators starting to onboard to the platform. And XCAD, which is the primary token of the XCAD ecosystem, is being taken out of circulation with more users using the platform as it's essentially staked in the play area, which is basically the tokenomics design for the token. So if you believe in the project, then the XCAD token is essentially a bet on the upside of the platform. You can also take part in their referral program. If you click on refer friends, you can get a referral code which allows you to earn 15% of the play amount on every nerd purchased by your referral. So that's one way to make money as well, essentially earning money off other people's referral fees too. Some people are making thousands of dollars from this because they've either sent it to their friends or they've posted it on social media because they have a social media following. So if you want to use the XCAD application, there's a link in the description below. If you need an access code to access the application, application. I've also put my exclusive access code in the description as well, so you can access and download the app. All links are in the description below. I hope you enjoyed today's video. We went through the 5 Bitcoin catalysts that you need to keep your eye on. I do believe these are all super important and all go to constitute the broader narrative of the next Bitcoin bull run. If you enjoyed this video, smash a like button, subscribe if you're not already subscribed, and I will see you next week. Peace out.